everyone. Hello, everyone. Thank you very much for being with us today. We are truly happy to welcome you back on board for our fifth and final episode on our 360 Degrees of Fundraising Masterclass series. In less than 5 episodes, we are covering the full value chain of raising capital in Luxembourg and beyond, welcoming you today on the Demystifying Alternative Financing episode. A little bit about our fantastic speaker's background. Mr. Tobias Seidel is an investment structuring expert and has been working in the investment and legal industry for over 10 years. He has co-founded Stoker and is involved in developing the best investment experience from both the legal and product sides. During summers, you can spot Tobias windsurfing in Europe. Mr. Bert Boneman is co-founder of governance.com. He has 20 years of experience in banking, financial services, and business development. Before launching governance, he held a number of senior positions at ABN AMRO Bank. His vision is to reinvent fund governance using technology to make regulatory oversight simple and transparent. Mr. Benoit Denis is a senior economist at the European Investment Bank Projects Directorate. Benoit conducts debt, quasi-equity, and equity transactions with corporates, public entities, and funds. He covers sectors including telecom networks, data centers, cybersecurity, fintech, and high-tech manufacturing. We also don't want to miss out on 2 exceptional guests joining us straight from Shanghai. Mr. Hope Fan, Chief Marketing Officer, and Christopher Wood, COO of Pixelmatic, a rising star in the gaming industry. On the moderator side, we have none other than Ms. Zoha Ahmed, Innovation Manager at PwC. Ms. Ahmed started her career in Philadelphia and soon after moved to the network office in Luxembourg. As an Innovation and Strategy Manager at PwC, Zoha has been a key advisor in exploring innovative business and operating models with her clients. As a partner of The Loft, she has been working closely with us to mentor, support, and partner with players from the local fintech ecosystem. Gentlemen, Ms. Ahmed, the screen is yours.
Thank you so much, Anthony, for that very enthusiastic introduction. Hello, everyone, and welcome to the last episode of the 360 Degrees of Fundraising series. It is so good to have all of you with us today. What we've been seeing in the past few years is that there has been a significant rise in alternative financing. So in today's episode, we'll be demystifying alternative financing schemes. So that is with the help of our accomplished panelists, we'll be going over how you can benefit from European financing, crowdfunding platforms, ICOs, STOs through private investors. In the session, you'll also have the chance to attend one of our workshops. And as Anthony mentioned, the first one will be talking about leveraging fundraising platforms to reach 10 million in fundraising. And in the second one, we'll be talking about leveraging crowdfunding platforms and scaling. Also, at any point, if you have any questions, please feel free to drop it in the chat. So now that we're done with introductions from our side, without further ado, let's put the spotlight on our panelists. Gentlemen, if you could very quickly share with the audience, what is it that you do, or what is the company that you're representing does? Maybe we can start with Denis. Would you like to kick us off over here?
Sure. Good morning, everyone. Thank you. Yeah, so as introduced, I'm a senior economist working on digital investments at the European Investment Bank, which is it's the largest IFI worldwide. We invest about 65 billion annually, and a lot of it is in Europe, about 90%, but we also invest about 10% of it in outside the EU. It's a long-standing institution. We're created back with the Treaty of Rome back in '56, but it's an institution that reinvents itself as the market evolves. So we used to do very large infrastructure projects, but now we have evolved a lot towards financing new evolutions, new economies, and so with the digital economy, and notably working with small entities. Part of the group, we have the European Investment Fund, which is a main investor in VC and PE funds in Europe. And obviously through those mechanisms, we channel our financing towards different kind of entities. one thing that is important, I think, to mention is that we are a public investor, even though we invest only in financially sound projects, so things that we think are going to hold together. We also want to invest where there is a market failure and when there is an economic and social impact for an investment. So that's the key driver for us. Thank you so much for having me.
Great, thank you. Thank you for that. Maybe Bert, if you would like to continue.
Sure. So yeah, thanks for inviting me, and it's great to see so many people on the call. So governance, what we are doing is we are digitalizing the asset management industry, and we're trying to do that one process at a time. And we essentially call that digital governance, how to run a regulated business more efficiently by always doing the same four things in a connected platform. It's connecting all the data and documents in one central place, and automating processes around that, visualizing performance and being able to monitor that, and then to record your decisions. And so what we try to help our clients with, and what we are helping our clients with, is to save money, to make their operations more robust, but very much also to gain a competitive advantage, because digitalized processes are much more appealing to clients of our clients as well. So this is what we're doing.
And then last but not least, Tobias, the floor is yours.
Thank you, and thank you very much for having here on this panel. I'm co-founder of Stocker, and Stocker is basically an investment marketplace where projects can raise funds from investors who seek to diversify their portfolio, who want to make use of new technologies by de-risking like their asset allocation. We target retail investors as well as professional investors, and basically what Stocker is providing is really like a one-stop solution for the ventures who seek funding. You can use ready-made and scalable investment structures. You can use our elaborated blockchain technologies we have implemented in the moment. Beside of Ethereum, we also work with liquid blockchain, and this helps you as a company to manage your investor base much more efficiently and to get in direct contact with your investors. And last but not least, you can present your project which you want to present to investors in a very beautiful way on our Stocker platform. So when you have a look at stocker.io, you will find projects which are featured there, and where you can invest into. So that's basically what Stocker is all about.
Excellent. Thank you so much for that. So let's get into some more details, and let's begin with talking about how do alternative financing schemes work. So Tobias, just because you were talking about Stocker right now, could you just explain probably a little more in detail that how is it that your solution helps raise funds?
So basically, what we provide as a solution is really like an investment marketplace for alternative assets. As you know, over the last, I would say, 100 years, the capital markets were directed and managed by big players who had solutions mainly for investing into plain vanilla funds and stocks and the likes, but investors like you and me, we never had really like the chance to invest into innovative companies at an early stage. We had no possibility to invest into alternative assets outside of the capital markets world. So Stocker is trying to simplify and give access to everybody to also participate actually in the alternative investment industry. And on the other side, on the flip side, obviously, we help by doing that innovative projects as Infinite Fleet, who are there today, a gaming company, to raise funds from their investors. And as I said in the beginning, we use the term security tokens. So security tokens mainly allow the ventures to really manage like the investor space by directly knowing at all times who actually are their investors. And this is the beauty of blockchain. On the other side, blockchain here in this sense allows the investors to directly connect with the projects. Which has a risk mitigation component because you don't rely on your broker, on your bank, on your custodian, and so forth, and it also allows you like to have a direct relationship with your with the company you want to invest in.
No, and thank you for sharing that. I know we'll be going into more detail in the first workshop where we have Chris and Hope, and you'll be interacting with them and you'll be able to explain more to the audience. Moving on to Bert, I think because you're on the other side, right? Governance.com just raised some funds. So if you could just explain that, how is it that your company has interacted with alternative financing?
Yeah, so when you talk about what is alternative financing, it's always in the eye of the beholder, right? Because to a banker, everything that we do is alternative. And so we've, over the history of our company, we've had different stages of the company, which we funded with different kind of funding, and essentially everything is alternative. I mean, we started with seed equity, then we had growth equity. We participated in an EIB supported Innofin program as well, which is a debt program, which we connected to an equity round. We did a convertible. So I think we've quite a lot of experience with different instruments, and each one of those have different advantages and different disadvantages, because none of them are simple. If you're raising debt, then you have to think about, you get the question about guarantees, and how, if people give guarantees, do you need to give warrants and things like that for that? If you do an equity round, then you have to think about valuation, and if you do a convertible, people say, oh, then we don't have to think about valuation, but now we have to think about discounts and interest rates and acceleration mechanisms and things like that. So everything is alternative to the other. The last alternative that we have done now is as part of our investment round that we just ran, and we are currently we have closed it, is a combination of private capital and crowdfunding. And so the Gapur, who will also be on the breakout room afterwards, can talk a little bit more about that. But he came to me when we were talking about the fundraising at the end of last year. He came to me with the idea of using crowdfunding, and I was extremely skeptical about that, because I said, what do you mean? I have a history where we are essentially doing technology in a regulated space where we're selling to financial institutions, and that is not very often understood by the broader market. And when you see with crowdfunding, if people don't understand it, they don't invest in it. And so I was looking to see, could I find deals that have been very successful that are similar to what we do, and I really couldn't find that much. So I was very skeptical about it, saying, are crowd investors really going to invest in a company like this? And I was actually pretty pleasantly surprised with that. We will talk in the workshop a little bit also about what you can actually do to get the people to understand it and to engage with your company very early on. And there are certain things that you can do to push it forward, but I was very pleasantly surprised. And so for us, the crowdfunding, one of the reasons why we did that was that, as opposed to a private round, it gives you a lot more publicity as well. So you are much more in the public eye. And by the way, not everybody wants that. So that is also a consideration that you need to keep in mind. But for us, we thought that would be very good, because it boosts our exposure to the market as well. And what we've also seen in the past is that our investor base also gives us access to other to other interesting benefits, like for example introductions, etc. And having a wider shareholder base is actually quite interesting.
Yeah, no, that's great that you were actually able to talk us through this experience. You thought of like how you weren't exactly first comfortable, and now you're able to immediately share some of the advantages of alternative financing. We'll be getting to that.
Yeah.
But before we do, you also mentioned that you were able to get funding through the EIB, which would be a good way to ask Denis if you could share with us what types of projects which can be financed through the EIB.
Yeah, thank you. Well, it's actually many projects get financed by EIB, that you know it or not, because we have so many instruments through direct financing or indirect financing. So if we look first at the direct financing, so this is when EIB enters into a direct relationship with a promoter that is looking to finance growth, usually an investment plan. We don't do acquisition financing, or very little working capital financing altogether. We really are focusing towards growth, because this is what creates the most economic and social benefits, obviously. And here we do work with the private and the public equally, especially on new tech. Actually, a lot of our financing is going towards private entities, with for large corps, mainly some senior debt, but then for startup scale-ups with which we worked directly, we use a venture debt product, so a debt product with some warrants associated to them, sorry. In terms of indirect financing, we work with funds. Obviously, as I mentioned, EIF is very active with a number of funds. It's an extremely important player in Europe, and we also work with banks. So, for instance, we have set up some facilities with a number of banks to finance SMEs. Some of them are dedicated to a certain topic. So, for instance, we've set up also some facilities that are geared towards the digitalization of corporates. Because, it's not only about financing startups that are developing innovative solutions. Those solutions need to find a market. So if the market is not able to incorporate them, to acquire it, when we're talking about a B2B solution, then it's blocking somewhere. Obviously, with consumers, we're not working, but on the adoption of tech solutions that are creating a real impact in terms of improving efficiency and so on. So we are financing it not only through indirectly facilities with banks. Then after, we have a number of products that we develop with the Commission. Some of them are guaranteed or partly guaranteed, notably with H2020. We have some thematics for the space industry. You might have heard of our recent investment in Inspire. So yeah, it's quite a number of solutions.
In a nutshell, yes. No, thank you for that explanation. My next question is actually for all the panelists. And so say I am looking to raise funds. What would you say? Why should I be opting for alternative financing rather than just simply going the traditional route? I guess, who would like to start? Maybe Bird, you want to start with this one?
Sure. Yeah. I think the answer to any complicated question is always it depends, and it's also it depends here. I think
a nice way to start.
Yeah, exactly. I think alternative financing, like for example crowdfunding or ICOs or other instruments that you can have, they make sense in certain cases, and sometimes they don't make sense. And for example, we found out the hard way is that one of the more traditional financing routes is by applying for venture capital type of investors to invest in your company. If you do that too early, you're wasting a lot of time, because these companies very often steer you in the wrong direction, to be honest, because they say everything needs to be scalable, needs to be repeatable, and you need to do this and this and this. But if you're just starting out, you need to have more flexibility that doesn't yet fit in the VC model. So in that case, that already excludes that and say, don't even try, go for something else, go for angel funding, seed funding, or go for crowdfunding, for example. And if you look at this kind of things also, I mean, if you look at crowdfunding, the market is developing extremely fast. There's huge amounts of money. Equity crowdfunding right now is growing at I think 50% rate. So it's very, very quick. But there's also disadvantages to that, because if you go the route of public funding, which it is, that also means that you're giving much more transparency to what it is that you're doing. And there's a lot of companies that start out misguided or not, saying what I do is they are very secretive about what it is, because they're scared that somebody will copy their secret sauce. But if you go for a crowdfunding platform, all that stuff is out in the open. You can, and you cannot ask people to go and sign NDAs for you. So you have to be comfortable with the fact that that information is public. Information about your revenues is going to be public. Information about number of clients may be public, and not everybody is comfortable with that. If you're comfortable with that, and if you're at that stage where you say that information can be shared, and I also have a story which I think can connect with the type of investors on a platform like that, then definitely you should go for it, because it offers you a lot of skill in financing. But you do need to weigh the pros and cons before making that decision, I would say.
Definitely. What about Tobias and Denny? Any one of you want to complement what Bert was just sharing with us?
Yeah, absolutely. I think I totally agree with Bert on this point. It really depends. I think when you look at classic funding processes, you have limited options, right? You can obviously go to your bank. You can try to make use of traditional capital markets, and you can seek for a venture capitalist, and then obviously there may be some others, public funding alternatives. But when you go to venture capitalists, you find yourself immediately in the need of being a sort of a unicorn. And we always say, we also have like some zebras, and not everybody wants to be like the biggest unicorn on the planet. And then it will be very difficult to raise funds from these kind of investors. When you look into classic capital markets, it's extremely expensive and almost unaffordable to make use of them. And I think what, for example, Stocker, like as an investment platform, provides with blockchain technology, here is like really getting like this direct access, and this can be interesting for any project who also thinks about like, do I want to have also investors who use, for example, my product, and that's what I think also Infinite Fleet is doing. And I always say, when you go, like, for example, to a BMW shop, right? They always want to sell you cars. They never tell you that you actually also can invest into their company. And I think this is something to combine these two things is extremely powerful. And when you can combine this, then it definitely makes sense to use such a platform as ours, and maybe also like a platform what like Bert was using for as CrowdCube.
Yeah. Just last one, Cindy, and then I'm going to be heading towards the last set of questions. I was just taking a look at the time, and I think like we all want to be able to get to the fun part, which is also the quiz and the workshop. So please continue.
Yeah, thank you. I mean, agree with what has been said. It's also your philosophy, you know, what you're looking for in an investor. You know, different investors with different backgrounds have, you know, are bringing something else when capital. If you know, a strategic investor that is along the value chain, or that could be a potential acquire, does add a lot of value. Clearly, the point on disseminating your information widely is one of the disadvantages of some platforms, even though it can also be an advantage especially when you're in the retail business, when you are in the B2C business and you want to create visibility. So yeah, things have to be thought through, and I think they are complementary as well. So you can combine different kind of financing. Makes a lot of sense. But I think we should always have a long-term vision on where we want to go, also in terms of your shareholder structure. How wide do you want it to be, depending on your exit strategy. If it's a company that the investors, the founders are looking to keep for a long time, or do they seek to sell it quickly?
Now, I think you rightly mentioned about, I guess, keeping the long-term view in mind. And this is where I come to my last set of questions, both for Bert and Tobias. What would you recommend for attendees today? Like, how should they be sustaining their business through ICOs and crowdfunding and STOs?
Yeah, I think somebody once told me, when I was complaining about the fact that I don't like fundraising, that they say, well, sorry, but it's your job as CEO to do fundraising. So get comfortable with it. So you need to, you as a CEO you need to understand the different kind of roads that you can walk, and some of them may make sense now and not later, and some of them may make sense later and not now. So it's good to have alternatives, not alternatives as the alternative financing, but to have different avenues, because you're going to have to try things, and some things may not work, and then you need to move on to something else. So that's why I think it's good to also look at this kind of alternatives, because all of a sudden it may work for you, and then if you have done the homework in that, and you know how those instruments work, then you can move much more quickly. And I like the idea of Tobias before, saying not everybody wants to be a unicorn, but even I think the unicorns very often they start in an identity crisis, because they all think that they're a horse before they discover that they have this thing sticking out of their head. And so you need to first figure yourself out. And at the moment that you do that, all of a sudden things might go very, very quickly. And then having access to platforms like this that can give you scale, because there's companies that raise an enormous amounts of money with this kind of platforms in a way much quicker than it would take you to go after individual investors and make the same story 50 times to an investor. So I think it's definitely something that people should look into early on, and then make the assessment: does it make sense right now, or does it make sense later?
True. Tobias, do you want to also add your 2 cents to that?
Yeah, I think what Bert said is totally true, and I think I can only agree to that, and I will make it in insistence short. When you think of obviously platforms like ours using blockchain technology, you should definitely think about are my potential investors ready to use that. When I want to target very traditional professional investors with a lot of paperwork required, then maybe it's not immediately makes sense. But when you have a community already around your product, and you say, hey, there are like people who love like new technologies, who want to be a little more independent from traditional finance solutions, then definitely I think it's worth to look at it, and then also like in the scalability and the value proposition for your investors, and providing something like really like innovative in the market. But I think the first question should always be what kind of investors you want to target, what are my existing investors? What would they think about it? And does it make sense to complement it or do it totally on such a new way of fundraising, I would say.
Yeah, totally. Especially when it comes to like you said, the investor group, it's a lot of stakeholder management at that point. So I'm saving the best for the last, where I would ask Denis just to share a quick success story from the EIB, just to give our audience sort of that light of hope when it comes to alternative financing.
Yeah, well, thank you. I mean, we have a few, thanks God. But no, there is an investment I feel quite proud about. It's an investment in company Famoco, which is a French fintech, which is a company behind the World Food Program Nobel Prize Peace of 2020. So WFP received that prize for helping people get access to food. But the technology behind it was developed by this company, by Famoco, which is a very simple technology to deploy, notably in refugee camps or in remote areas in affected geographies, very extensively, notably on the African continent, which enable to provide a certain amount to people who require them, to identify them first of all, then to support them with this social aid, and then to go by certain food items, only food. It cannot be used for something else. It cannot be used for alcohol or cigarettes, for instance, in shops that are equipped with the terminals. So I think the company is doing great. They have a great pool of investors, you know, throughout the value chain. Some really financial investors like us, some more industrial investors like Orange, for instance. And yeah, it's great to be associated to this success and to the Nobel Prize.
Yeah, no, that is an incredible story. Thank you so much for sharing that with us, with the audience. And of course, a big thank you to our panelists for sharing their experience with us. This was, at least for me personally, I thought this was very informative, and I hope it was the same for our audience. So now, while our panelists are going to be entering into their breakout sessions, we are going to have a quick quiz for our attendees. Anthony, this is where I hand it over to you. Yeah.
Yes, of course. Now we want to see whether you've paid attention. Those questions have been compiled by our speakers, panelists. So all you need to do, guys, is to click on the link. We are starting in about. Okay, the first people are all already dropping in. I want you to put in the your last and first name, please. Okay, we are starting in a few seconds, please. I want to see more people. I want to see more people. Let me do a share screen right here. Please go ahead, guys and girls. Let's go up to 20. I want to see 20 competitors. I want to see 20 competitors. We got 20 more seconds to get there. Go ahead, guys. 15 competitors. There you go, 13. We want to go up to 20. Go ahead. Even if you're bad at it, doesn't matter. Let's go. 20 competitors. 6, 5, 4, 3, 2, 1. Let's go. Youssef first, Alain Goodrich second. Let's go, guys. It's a tough one. It's a tough one. You guys have 1 minute and 40 seconds to finish. Let's go, guys. Yusuf first. Who's test? If you win, you'll have to introduce yourself. Virginia second, Alain Goodrich third, Daniel Stoika fourth, Yusuf fifth, Vostek sixth. Let's go, guys. Oh, it's a tough one. Bert had the toughest questions. Bert had the toughest questions.
I'm not test, I promised.
But he's not apologizing. Yussi first. Ala second. The blockchain man. Third place. Let's go, guys. This quiz is a tough one, I have to admit. 45 seconds left. Oh, Nikolai second. Third. Come on, guys. 35 seconds. Blockchain man is first. Yusuf second. Let's go, guys. 20 seconds left. Ooh, Vostek second. 15 seconds left. Let's go, guys. Blockchain man first, Vostek second. Oh, okay, Vostek first. 5 seconds left. Go ahead, guys. 3, 2, last chance. 1. Let's go. Vostek Simon first, Yusuf second, the blockchain man third. Vostek, please introduce yourself.
Hello to all. Well, happy to see all of you guys since it's a rare occasion to meet. What we are about, we are structuring data so that economists, financial analysts, and data scientists can better feed their models and their data sets.
Thank you so much, Vostek. So what we are going to do next, I'm going to open up the breakout rooms. Myself, my colleagues, Fred Weimarskirch and Daniel Calderay will help us to assign you if you don't have the latest version of the Zoom session. If you do, you'll be able to join the breakout rooms manually. All you need to do is to choose one of the 2 workshops. The first one is going to be with Tobias and with the people from Shanghai, Christopher and Hope Jan. And the second is going to be on with Bert on how to raise funds on CrowdCube.
You need to what you need to know is that 64% of crowdfunding campaign actually fails, and one of the reasons is that companies don't plan enough and they don't allocate enough resources to it, because running a crowdfunding campaign is takes a lot of time and takes a lot of resources. So first, why did we even do a crowdfunding campaign? Has Bert explained? I mean, we really wanted to leverage our community, and the way that you need to think if you want to even consider doing a crowdfunding campaign, don't think that you will. If your aim is to raise, let's say, 1 million, don't only count on your crowdfunding campaign. Really see your crowdfunding campaign as a way to complement your direct fundraising efforts. And by direct fundraising efforts, I mean, try to raise from your existing shareholders, contact business angels clubs like Elban in Luxembourg, for instance. And then obviously it's a good way to leverage support from your community and allow smaller investors to become a shareholder. And it can also provide a marketing boost if you want to expand internationally, for instance. You need to consider several things before doing a crowdfunding. You need to assess the investing appetite of your community. The majority of companies that are doing crowdfunding are B2C companies, so business to consumer that have already a certain community. If you are a B2B company like governance.com, for instance, you really need to plan carefully and assess if you have in your own network, in your community, people that will be interested to join. And then obviously choose the right crowdfunding platform and allocate resources. And the reason why we chose to raise on CrowdCube and partner with CrowdCube is because CrowdCube is a leading European platform and is focused on fintech. More than 120 fintech raised on CrowdCube. They have over 1 million of investors. And what's really helpful is also if you have, let's say, 500 investors that want to join and invest small amounts, small tickets into your company. What CrowdCube can do, they can set up a holding structure and gather all the investors into this holding structure, so that in your cap table you will only see one new line, one new investor, and all the KYC and the management of the structure will be done by CrowdCube.
This was a really important point. If you just go back one slide, this was a really important point for us, because what every early stage company is worried about is having a very complicated shareholder structure, but it's not just worrying the founders or other people in the company, but it's also worrying potential future investors. If you at a certain moment get institutional investors to invest in your company and you have a very huge shareholder base, and if you then on top of that would make the mistake of signing shareholders agreements with all of them, then it very quickly goes out of control. So it's very important to consider this when you do equity fund crowdfunding. First of all, equity crowdfunding is subject to some regulatory topics as well, like for example KYC, which is we had 665 investors investing through the crowdfunding campaign. If you have to do the KYC on each one of them by yourself, then forget about running your business for the next 5 months. So you still have a business to run. So it's important to choose a platform that can do this kind of things and that create this nominee structure. So in your cap table, you just get one line. During the campaign, you're reaching out to all the investors and you try to engage with them, but ultimately in the cap table, you have just one investor and you have one counterparty to deal with, and the platform takes care of a lot of the things for you. That's a really important point.
Yeah. So the CrowdCube process, so you basically have 3 major phases. So obviously you need to start working on the creation of your pitch. And then what you need to know is that all the crowdfunding platforms are regulated. So when each one of them, if you are raising funds if you want to raise funds on CrowdCube, for instance, for each claim that you will make in your pitch, you will need to provide evidence. So for instance, if you are mentioning that you have 20 years of experience in your industry, you will need to provide with evidence. It can be in your employment contract. If you say that you have a partnership with a Big Four, you will need to provide an agreement, partnership agreement. If you say that you have, if you say that JP Morgan, for instance, is your client, you will need to provide evidence for this claim. And CrowdCube will need to verify. CrowdCube will also run basic KYC checks, so verify the identity of the directors of the company. And then you will be able to start the promotion of your pitch. And you will have 2 launches. So first you will have a private launch. So during your private launch, CrowdCube will not inform their community that you are raising yet. What they really want to do, they want you to make efforts and try to get at least 50% of your minimum funding. And so really during your private launch, you should leverage your network and community, but they don't recommend at this stage promoting your campaign on your website or on your social networks, but really take this occasion to reach out directly to your potential smaller investors and provide them an opportunity to invest before the public launch. And once you have secured the majority of your minimum funding, you can go live. And then during the public launch, your campaign will run on CrowdCube for 1 month. And what CrowdCube will do, they will send in their newsletter an information that's informed that your company is raising on CrowdCube. Then if the small investors already see from the first day that your company has already secured 75%, for instance, or is already overfunded, that will excite them and incite them to invest into your company. So, and then obviously the last phase is the completion of the round and a legal review. So you see that this will take from 2 to 3 months. So you really need to plan your whole campaign. So first, let's go back to the first point. So the creation of the pitch. As I just said, CrowdCube will do a legal review of your company. They will review your articles of association, your shareholders agreement, make KYC checks on your directors, etc. You will need to provide evidence on each claim. You will need to record a video from your founders. What you really need to do, you really need to customize your deck and BP according to your audience. Because if you are pitching to a business angel who has 20 years of experience in your industry, obviously you don't need to go into details about the problem in your industry. But for the crowd, you will maybe need to either explain more a problem within an industry or remove technical slides that won't interest small investors that will put a few €100 or a few €1,000 into your company. And then you will need to plan the promotion of your pitch. Try really to during your private launch, try to leverage your own community and get a big percentage of the funding. So that's the private launch.
That's right. That's an important point that we said before, and that Kapur also just said is, don't count on the platform doing everything for you magically. You're going to have to put work into this, and you're going to have to try to pre-fund that during this private phase with some investments, and that is critical for the success of your campaigns. That's really something not to be underestimated.
Yeah. Once your pitch deck goes live, so during the public launch, CrowdCube will promote your pitch in front of their community. So they will include your pitch in their newsletters. They have over 1 million of investors. So your pitch will gain a lot of visibility. What you really need to make then, you need to increase marketing efforts to promote your pitch and build a momentum. It's really important, as your campaign will last for 30 days, it's really important that you keep an ongoing interest. And you can do it. I mean, we had 3 main messages, positive messages. We had strong commercial traction, a release of a new version of our product, and then we had bigger investors that were willing to that invested into our round. And you need to plan when you want to send those messages, because one of the questions during the quiz was when is you basically raise the most money during your first 3 days of the campaign, because there is an interest then. Then what a lot of investors do, they just click to subscribe to follow news about your campaign, and then they will decide during the last days of your campaign to invest or not. Between those days, what you need to do and what is really recommended is to send updates on your businesses every 2 days. So it can be whether you have a new client, whether you hired an advisor, make a new partnership, something really positive and exciting about your business.
And that can be quite nerve-wracking, because I mean, we were basically running in parallel with doing a lot of work ourselves and trying to get investors in, and we have experience with that, so we knew that we should be able to also raise by ourselves next to it. But I can imagine that if you're really relying much more on the crowdfunding campaign and you see this flat line for a long time in the middle, so you see it going up in the beginning and you get very excited, say, wow, at that rate we're going to smash through every ceiling, and then you see a long time nothing happening. So it's good to know that that is a normal behavior of a campaign, but you do need to keep pushing on the messaging.
What you really want, you want the more people, the more investors see your pitch, the better it is for you, because you will have potentially you will have a higher conversion rate. So we have gathered a few best practices here. So investors they will have an opportunity to ask questions. Make sure that you reply fast to them. They will also have the option to request your pitch deck or your business plan, and then you will need to grant access to them. You will be able to see the name of the person. You have the option to reject the amount if you see that a competitor, for instance, is requesting to see your deck. Really, regarding the updates, so it's recommended to write updates every 2 days. So you really need to have to allocate time and carefully thinking, because you don't want to repeat yourself. And if you write updates every 2 days, it's sometimes hard to find compelling news to share with investors. So try to plan that. And then depending on your business, you may want to push your campaign on your social medias, on your website. Obviously, you will need to include the working capital at risk. And then what really worked during the campaign is that we organized a Zoom FAQ session with the founders. So with Bert and Rob, and smaller investors really like to see that we are also consider them just as equally as all the other investors, and we are really committed to provide them with all the answers to their questions. And then we saw a boost of investing after that.
Yeah, if I can just include, preparation is key here. I mean, we had 650 investors. So during the whole campaign, we had a lot of questions, a lot of updates on a lot of questions and updates on our own updates. So you have to make sure that you create a real base of resources around you, because you're going to get questions in different time zones from different companies, different types of questions. So you really have to get all different types of people in your organization on board during this phase.
It will probably take at least one full-time person during this month when your pitch will be live, and all the investors from CrowdCube will be able to see it, because it takes time.
Yeah.
And you need to allocate your resources accordingly.
Maybe we can do the last bits, and then we also open the floor a little bit for some questions. I think that there might be questions from other people, and I think Anthony is being very strict with us, saying there's only 10 minutes left.
Yeah, so I'll be very quick. So the last obviously will be the legal review. So CrowdCube will review the articles of association of your company. They will, in most cases, they ask to amend them. Just to include the management of the SPV structure by CrowdCube. And then you also need to know that in most of the crowdfunding campaigns, there is a drop out of the commitment to from investors, either for KYC reasons, because one investor didn't pass the KYC requirements, or because they don't have enough cash on their credit card. Then obviously they will set up the holding structure and wire the funds. And what you need to keep in mind also is that after the closing of your round, you will need to update your shareholders with a quarterly reporting. That's a requirement from CrowdCube. So that's it for us. And let's have 10 minutes at least for the questions, if you have any.
Thank you all for actually sharing that experience with us. As Gabor was mentioning, we're going to open the floor for some questions. And maybe actually I can get started just to encourage people to be a little open, because we're lucky enough to have Bert, Gabor, and Gavin here to share the experience with us. Bert, you were mentioning during the panel that you had this hesitation of going through CrowdCube, and right now you also mentioned that at one point you have a plateau where you don't see like the investments come in. I guess what was it like for governance.com? Knowing that, okay, you were initially hesitant, then you're not really seeing any funding come in, and I'm sure your team was working extra hard to answer all the questions of the investors. How were you able to rise above that plateau?
Yeah, so I mean, the team was great on it, and so Gabor and Gavin were both making sure that we had this really interactive attitude towards everybody that was engaging on the platform, reaching out, sending follow-ups, sending updates, etc., to have a good plan for that. So I think that was critical. For my side, there was less that I could do about that, and in order to keep my sanity, I said, I'm assuming nothing from it. So everything that comes in is bonus. And actually, by the end, I was really blown away by the response that we got on that. So I think that's maybe a good attitude to keep in mind, is in saying you have to make sure that if it doesn't work, because Gabor gave you some statistics about that not everything works. If it doesn't work, that you're not with your back against the wall, because that will be a very nervous situation for you.
Yeah, no, thanks for that. And I especially appreciated at one point in the presentation, you've been generous enough to share with us some of the best practices that we can be following. So yeah, thank you for sharing that with the audience. Anyone here who has pressing questions for our panel here?
So the question maybe from my side, and maybe people can respond to that. Are there other people here that are currently considering or running a crowdfunding campaign? It would be interesting also to get your views on that. But yeah, so like we said before, it's definitely something worth considering if the time is right, if the fit is right for you, and like Gapur mentioned before, and Gavin also said, don't underestimate the effort that you have to put into it. It's not a matter of you just putting some pitch deck out there and then people magically jump on it. It requires effort. It requires hand holding. And I think also in choosing the platform, because I read recently that I think there are about 600 crowdfunding platforms in the world now, which is completely crazy. But there are very well-known ones, there are less well-known ones, but they also specialize in different things. Like, for example, CrowdCube focuses on equity crowdfunding and can help you also answer questions about how do you deal with KYC, and the fact, for example, that they could tell us how much of the investors are likely to drop off at the end of the campaign. That's also good to keep in mind, because maybe you end up with 500,000 euro investment, and then all of a sudden you say, okay, boom, that's great, and then 10-20% drops off at the end. So it's good to get information from the platform on that. I think we have one question here.
We do have a question. I will just read it out. Can we use crowdfunding to acquire regulated clients, example, banks or insurance companies? We have secured our first client in December, and now we would like to expand. Also, congrats for the brilliant presentation. This is by Virginia.
Yeah, so is it crowdfunding to acquire investors that are regulated themselves, or to invest in as clients? I mean, the crowdfunding is a way to get funding into the company, obviously, but it doesn't open you up as a company that is funding itself. And one of the things that we've seen in the past also is that our investors are very curious about our financial standings. And so we deal with banks, with large fund management companies, etc. And they are very interested to know if we're going to be around for the next couple of years. And that was one of the considerations that we had at the beginning of the crowdfunding. We said, well, we've already done direct investments with angels, and now we go for crowdfunding. So might this message be construed as we are desperate to try something, or would it be seen as something saying we get access to something new? And because we were not desperate for it, because we could have done it differently. And we decided that it might be interesting for us. I think if you can show reasonable traction, and you can show that you have an interesting client base, and that you're moving well, this could definitely create publicity for you, that clients that are looking at you will take into their decision-making process. Now, will it give you clients? I don't think so, but I mean, if you Google the name of your company, you will likely pop up somewhere that you're doing a crowdfunding campaign. And so for clients that are already interested in you and looking at you, they might take this into their consideration. Hope that answers the question.
Miguel, I think that you have a question. We have
yes, quickly. Thank you. So we've launched a company last year, and we are not yet really operational, still in project phase. My question is the following: from your experience for crowdfunding, does the company need to be already, I mean, maybe not profitable, but has a minimum of recurrent revenues? Or from your experience, did you have companies who launched a campaign without just, I mean, with an idea?
You can
Here he is.
Here we go, guys. It took us a few minutes to assign everyone, but you can start right now. Tobias, guys, go ahead.
Yeah, right.
All right, I'm gonna have to follow that energy, right? Okay. So, guys, yeah, welcome to our breakout room. It's really good to meet you all. I think the panel was very interesting indeed. I hope you all found something quite interesting. Obviously, we are Infinite Fleet. We are a massive multiplayer online space game. It's extremely cool, if I may say so myself. And it is being built by some AAA game dev veterans that have been in this industry for years. I mean, our team's shipped basically like over $1 billion worth of AAA video games before. So it's really cool. And we're doing that. We're raising money with Stocker. Tobias over there has obviously been talking about that just now, and Stocker has been really fantastic on that. So what I might just do is just give you 5 minutes of a bit of an overview about what it is that we're doing. And then, we can kind of just go from there and have a bit of a chat. So basically speaking, Infinite Fleet is the first AAA video game that's actually integrating a crypto economy as its currency in the game. So I'm not sure how familiar many of you are with games in general, but things like World of Warcraft, these massive MMO, massively multiplayer online games, they have gold in the game and people kind of trade and do this kind of thing. In our game, that currency is actually a digital token, but I think Hope can talk a little bit more about that later. I think I'm going to talk about the game a little bit because I'm a massive nerd and, Hope stop me if I'm getting too geeky. But our game is, of course, as you can see in the artwork, it's set in space here. You're going to have a fleet of ships that you control, and you, with hundreds and hundreds of thousands of other players, are banding together to fight back against an alien threat. And what you do is you build your fleet. You have these incredible, just gorgeous spaceships that you kind of take apart and put back together and put amazing guns and technology on to make it your real awesome fleet as such. And in these kind of MMO games like World of Warcraft, players get really immersed. It's like a kind of like a second life, right? I don't know if any of you are players, but people really get into these things. And for us, we really leverage that with our USP, our sort of main, one of our main features, which is the directed narrative. So the directed narrative means that any player of our game has the opportunity to have a massive impact on the entire story of it. So an example I like to use is if the Atrox aliens come to Earth with their force, the hundreds of thousands of players have to band together and fight back. And if they fail, then Earth could be wiped out and key characters could be dead and completely out of the game for the rest of the future of this game. It's very exciting for our players who can have a genuine impact. And just briefly, just want to mention some of our team members because they really are fantastic. We have some people from, I don't know if anyone knows any games here, but Age of Empires 4 is just massive IP. Homeworld is the highest rated space game of all time on Metacritic. And Warhammer 40,000 Dawn of War as well, which is just a huge RTS game, strategy game that our team worked on. So, for example, Wayne here, he's had over 20 years of experience in technical art. He's really driving the AAA standard here. Jeff, on the networking side, he's been in, I think, 25 years developing games, and he was on one of the original massive multiplayer online games, Ultima. He was their third programmer, so he knows everything there is to know about networking to make sure we can get hundreds and hundreds and hundreds of players playing together. So it's really cool. But the big cheese is Samson, the creator. So if any of you are in crypto at all, you might know Samson. In fact, Hope, maybe you want to give a bit of an intro on Samson's kind of crypto background, because I know you worked with him previously in your previous job at BTCC.
Right. Yeah. So what you're looking at is Samson, who is the creator of the game, and he's also a big personality in Bitcoin. So I actually used to work with him at BTC China, which was about 4 years ago, back in 2016, one of the largest cryptocurrency exchanges in the world, and also one of the largest mining pools. So for whoever here is familiar with blockchain and crypto and Bitcoin. So prior to that, Samson was actually a game executive at Ubisoft. So we have a lot of experience on both sides in terms of game development, having worked on some of the top-rated AAA games back in Canadian game studios like Relic and BioWare, but also we have a lot of experience and as some of the sort of early movers in the Bitcoin space as well. So we saw an opportunity there to sort of combine the two sectors together. And also what's really promising to us is both of these sectors are very much I would say present and futuristic sectors, right? So obviously everything around us is going more and more digital. Cryptocurrencies and Bitcoin are really catching on, especially this year. You guys all heard about Tesla, Elon, and everybody coming on board, right? So gaming obviously is huge. It keeps growing year on year, and there's more and more people who spend their pastime online, and it's a natural way for people to socialize as well, multiplayer games. So basically we want to leverage the two together to produce a game that will sort of bring value from the digital asset realm to the real world.
Yeah.
Chris, back to you.
Yeah, no worries. I thought it'd be cool to talk to them a little bit about our INF token. What do you think about in the game? Because what we're doing, which no other game companies really are, is having this native cryptocurrency in the game itself. So what players will do is, as I was said, they have this fleet of ships that they're kind of jumping in and digging into and spending a lot of time on. People who play MMOs, they spend thousands of hours on these things. I sure did when I was a kid. And they get these really valuable assets like spaceships or just their characters or whatever. And for us, when you play our game, you are rewarded with this currency by taking part in events and things, and you can use it to trade those items player to player, which is really exciting because that means you can technically take these really valuable items and gain value from it and be able to extract that onto your own digital wallet and take that further. What do you think? Hope, anything you want to add to that?
Yeah, so I mean, obviously, I think the theme of this webinar is about future technologies and different models of fundraising, right? So we are leveraging blockchain technology in two aspects. So obviously, we're working with Tobias and Stalker for raising funding for our project and our company. But also we're leveraging blockchain technology for the game, for the product itself as well. As Chris talked about, we are putting a cryptocurrency as the actual currency of this multiplayer game, which I think is going to be quite disruptive, because if any of you guys who are listening are gamers, and if you go on like Steam, for example, and you look at the reviews of some games, right? People, there's a little stat that tracks how many hours you've spent on the game, right? So for some games, you can see people have spent like 400 hours playing, I don't know, Football Manager or something like that, right? And so just the amount of time and dedication that people put into games, we think it would be fantastic if they're able to extract real world value out of that. And that's something we're trying to achieve with this, and we're one of the first ones to do this. So it's very exciting.
Indeed. Obviously, anyone can kind of reach out to us if they want to, get more involved. But I think we should talk a bit with Tobias, of course, and about us kind of, how things have been going with Stalker. And just quite frankly, Stalker have been a fantastic partner with us in this whole process. They've really made it so easy for us. And so kudos, thanks very much, Tobias, but we've had a dedicated project manager who's taken us throughout the whole process. We've been doing really well on this raise. And it's definitely something that, if you are considering crowdfunding, if you are considering this security token method, it is a good way to do this, because obviously these security tokens are totally regulated. Tobias and his team are really incredibly knowledgeable in this area, and makes us feel very, very safe in their hands, shall we say, to be issuing our assets in Luxembourg. And yeah, Tobias, maybe you want to add something.
I think we cannot really add. Thank you very much.
Just blush. Yeah.
Course, yeah. No, I think we have a lot of people now in the room. Do you have any questions to the Infinite Fleet team about like how the process was working, maybe on the product and how to invest in, or even to Stocker?
Please go ahead, guys. Don't be shy, yeah?
Don't be shy, yes.
That's the last thing we want.
Yeah, guys, thank you for this presentation. I have stupid question. Really, I think it is really stupid one. So I very quickly about my background. So I've been like investment banker for I think 15 years, and then at S&T I was working with blockchains, but I was working on blockchains from technical part, not from sort of fundraising part. And I still, guys, don't really understand how you do it. I mean, how you unite these two things, the technical part on blockchain with the fundraising, because really, so am I right in understanding that basically what you did is just you did a sort of ICO of the tokens that are used in the, I mean, in the case of games as a means of payments inside the game? Is it the way you did it, right?
I'll start. I think I can. Tobias, do you want to? Oh, okay. I just want to separate. So we said that there is a cryptocurrency in our game. That is not actually the asset that Stocker has been working with us on. That is a purely sort of utility token. We're not raising money with that token, essentially. What we are working on with Tobias and Arnold Stocker is a security token. So it's basically a tokenized version of a share in our company. So it's equity and a dividend paying instrument, essentially. So Tobias, would you like to add? No problem. Tobias, would you?
Yeah, I think like Chris, you can also start from our perspective, from the solution we are providing to Infinite Fleet. So I think it would be good like to explain where we see like the added value. Obviously, you can do like a very small private round on paper for some investors. But what Stocker is providing to projects like Infinite Fleet is basically it open up to the public and showcasing it on the website and making it more accessible for everybody. So you can when you are in a European eligible country, you can invest into such a project without having been in contact before with the project. So that's like one biggest advantage. From a venture side, I would say it's like the one-stop solution. So we build like all the legal structures around it, and we provide like projects like Infinite Fleet with the possibility to manage like then their whole investor register on blockchain. So it's the token is actually a representation of the ownership in Infinite Fleet, and it mirrors actually a percentage of all of profits which are generated by this game over time. It's a certain percentage of profits. So basically, you see it's just a simpler way, a more transparent way to raise funds. Obviously, when you only have 3 investors and you want to target only 3 investors, maybe then it doesn't make really sense.
Yeah, and just to add to that, I mean, there's that democratization of financing, essentially, where what we wanted to be able to do was allow our players to actually invest in the project, which is really cool. So not only do they, you know, put in 100 euros or whatever to jump in? But they also get some assets in our game. You know, they get some rewards like a traditional Kickstarter. So in a Kickstarter, which is one route that we had originally considered when we first were starting Infinite Fleet way back when, of course, what Kickstarters do is you're essentially just pre-selling your digital items, right? You sell them spaceships or whatever it might be. For us, our players are actually our investors too, which is amazing. They become ambassadors for our product. They're going to get out there and make sure that Infinite Fleet is a massive success, because if we're successful, so are they.
Please go ahead, Youssef.
Yeah, so I was just wondering if we can see the Stalker platform and in particular the games page on there. That way, I guess it will be more clear what Stalker offers as a, I guess, in terms of alternative funding and how it looks to the general public and so on.
Can you guys see my screen right now?
Yes.
Yeah.
Yep.
You can. Yeah. So this is, I've just jumped onto the site. So this is our page right now. So as you can see, it's a pretty sleek UI. Obviously, we've worked with the team to provide various things for our pitch, obviously, you know, and whatnot. We've worked, you know, very closely together. As I said, they provided a sort of a project manager who we work with mostly to set this whole thing up. I can't actually go through and invest right now, to be honest. Maybe you can show on a test thing yourself, but it's a pretty straightforward process as far as I'm aware. It's just a case of, you know, going through the basic KYC with dropping your passport in and being able to just hit the button and go for it. I mean, Tobias, do you want to share a demo or something, or shall I stop sharing?
I think like the main thing I think is what you can see here. Also, when you go on stalker.io, I will try to share also like some.
I'll stop sharing. Yeah.
It's basically that you can see on the stalker.io Infinite page when you can share it again, Chris. That would be.
Oh, sorry, I thought you were sharing. My bad. Just a moment. Tell me where you want me to go.
Yeah. So basically, what you can see is like here you see like on the right side here you see like the when you go up a little bit, you see here on the right side is like, okay, it's like what kind of profits are shared by this specific project. Then you have obviously like a time in which you can invest. So here you see like the 18 days left, and there you can see below how many investors have already invested into the project. And going down a little bit, you see like they're currently standing at 2.75 million in raising funds. And when you click on this investment button, you would come into the investment flow. But as Chris is right now, not.
I can share, guys, if you want.
Yeah. Mm-hmm.
Sure. I'll let you share. I think you might need to be co-host though, Arnab. So I think Anthony, you might need to give him co-host. To Arnab Naskar. So many tabs, Arnab. You need to clean up, man.
There's a busy man.
A busy man. He's a busy man.
I was not ready, guys. So
yeah.
At least I'm wearing
all
clothes.
Of these people are looking for him.
I'm wearing clothes. That's the only thing I can guarantee right now. I'm these days much more in the clubhouse mode, you know, where you can wear anything and just jump in.
Can you just explain what you're doing, Arnab?
Yes, I thought Tobias you will explain. Okay, so guys, Tobias, if you want to explain, that would be great. So I can just share, and I'm just sharing the page how you do.
Step back. I think like now we are in the investment flow. Just for your information, before you can get into the investment flow, you would need to create like an account at Stalker. You would click on sign up on the main page. And then you would come into like a very straightforward process where you do AML KYC, and you connect actually your blockchain address. Here in this specific case, it's a liquid address, which is held on the green wallet with our platform. This allows actually this connection of your blockchain address with the Stalker allows like to assign and issue the tokens which represent then basically the proof of ownership in the company. So these are like the security tokens. Arnab, you're like now in the investor dashboard, right?
Yes, I'm showing right now the investor dashboard where I will quickly share with you. So this is something like which is very interesting, and I think there was some question on why blockchain is being used. I would like to answer that. When you we all know what happened with Robinhood, right? When you tried to sell your GameStop stocks, Robinhood said no, you cannot do it because our clearance is fucked up right now, right? And that's the big problem, because when you buy a stock through a broker, you don't get the ownership. You just get an IOU or just a claim. That's it. But what we are trying to do is the same concept that Bitcoin gave you, is not your keys, not your Bitcoin. The same way, not your securities, not your securities. Technically, you require your own ownership of the securities. And when you hold this kind of infinite fleet stocks, or let's say securities in your blockchain wallet, you hold the complete ownership. And that's the beauty of them. That's where the blockchain comes. It creates a direct link between the company and the investor. And how you see it here, let's say I'm just showing you transaction details. So let's say I bought this token of Infinite Fleet on 15th of January. These are my investment documents that generates the moment I sign an investment contract. And you can see from here that these investment contracts are completely timestamped with full name. And that's the beauty, because in the blockchain, you cannot tamper it. So once your ownership is there, it's there.
Does this explain a little bit the concept of the platform, Yusuf?
Yes, that was great. Thank you very much.
Good. We have time for one.
I just want to add. I just want to add. I just want to add a little bit to what Arnab was saying. So I guess it sort of answers Alexander's question earlier. So that's exactly why, right? Because I think the security space is ripe for disruption because blockchain tech is able to offer some efficiencies in those processes, right? So what we're doing right now is security token offering with Stalker. It's basically like a mini IPO in a way, right? But if you think about a traditional IPO or just the process of company going from startup to public, right? You go through VCs, you go through people's networks, you find VCs, you raise some rounds, and then when you're doing the IPO, you go through an investment bank, underwriters, and then you go through a brokerage to the end user who actually buys your shares, right? So there's a lot of steps. It's very inefficient, and like Arnab said with the Robinhood incident, right? If you're an owner of the shares, you don't actually own your shares. You're trading through a broker, and if they shut down the trading, you can't sell them or in time, whatever, right? So whereas if you're holding your own token in your own wallet, you can simply find another exchange that's open and functional, and you can sell it there, right? So I think there's a lot of efficiency improvements there, and I think in terms of fundraising, you sort of have three different types. You have the traditional method, then you have Alexander, you mentioned earlier, like ICOs, right? So the Wild West from 2017, 2018, where basically you had no responsibilities as a project, and a lot of people lost money because there were no obligations or anything, right? So I think everybody knows ICOs are dead. They're not going to last in the future. Even if they do, the securities agencies like the SEC, they'll go after those people eventually, right? So you have to raise money. If you're raising money for a company, you have to do it in a regulated way. And security tokens is, in our opinion, the best of both worlds. So you have the blockchain tech that helps improve certain processes, give ownership to the holder, and then at the same time, you're tying that with the legal side for one-stop solution, which is what Stalker is offering for us.
Okay, guys, we need to wrap up. Any last comment?